Hey YouTube, I'm Jimmy. In this video, I'm going to walk through my analysis of the UnitedHealth Group, ticker symbol UNH. This is the 26th video in our series where we're analyzing all 30 stocks in the Dow Jones Industrial Average. You can see a link in the description below for all the other videos. When we're done with that analysis, we're going to take that analysis and we're going to try to build three different portfolios: a dividend, a value, and a growth portfolio. Okay, so UnitedHealth has what they call two different platforms, UnitedHealthcare and Optum. This is a breakdown of their revenue for 2018. And as you can see, UnitedHealthcare dominates their revenue. So let's dive in a bit closer and look at each platform. We'll see what they do, we'll see how much revenue they generate, and then towards the end of the video, we'll look at what is the fair value, what do we believe the fair value of UNH's stock actually is. Okay, so how about we start with Optum? So we can break the Optum platform into three different segments. In 2018, OptumRX accounted for about 68% of revenue. Optum Health accounted for about 23% of revenue, and Optum Insight accounted for the rest. So OptumRX provides pharmacy services to about 65 million people in the United States. Their services are offered at they have somewhere about 67,000 pharmacies and home services that they distribute through. Now, if we switch to OptumRX revenue, well, we can see that growth over the past few years has been fairly consistent. And it seems that UNH has done a good job of growing this segment. Now, one thing I came across in my research is that in 2018, OptumRX began to shift a bit towards providing more hard-to-get drugs. Some for HIV, they have some oncology drugs, things like that. And although UNH didn't offer any specific profit numbers, I can imagine that targeting this type of drug is likely to be more profitable than the average drug. And that should be a good thing for OptumRx revenue growth. Now, there was some news that came out in January that Cigna was going to transition away from using OptumRx. Now, this makes sense for Cigna since they closed their deal they bought Express Scripts at the end of 2018. So essentially what they're going to do is they're going to bring what OptumRx does in-house. Obviously, this isn't a good thing for OptumRx, but I think that this has been talked about for a long time, Cigna doing this. So I think the market was largely ready for what was about to happen when they announced it. Okay, jumping back to the breakdown. So the next largest segment on the Optum platform is Optum Health, which accounts for about 23% of revenue. Now, when we dive in a bit closer and look at this segment's revenue, we can see that once again, this segment is growing nicely. Now, this segment had a few acquisitions in the past year or so that are expected to help improve margins in the short term. And essentially what this segment does is they're the health and wellness arm of Optum. The way that they put it is that they serve the physical, emotional, and health-related financial service needs of more than 93 million people. Now, the financial service needs part of that actually struck me as interesting, and initially I was a bit concerned with it. But after doing a little bit of digging, I didn't think it was all that bad. Basically what they do is they own a bank and they process medical payments and they help finance various health-related activities. I saw something that they called, I believe, Optum Wallet, something like that. I believe that's where they're focusing right now, which isn't that bad. My initial fear is that they'd go down the General Electric road where GE Financial Services eventually became such a large driver of profits that they focused more and more there and leveraged it and took more and more chances until eventually it became a huge problem for them. I don't think that's the case here, but it is something I want to keep in the back of our mind as we go forward. Okay, back to the breakdown of Optum again. Our final segment is Optum Insight, which accounts for about 9% of revenue. This segment focuses mostly on technology, research, and consulting in the healthcare industry. Now, when we dive in and look a bit closer at their revenue, we can see that once again, it's been growing quite nicely. Now, this segment is crucial to the long-term success of UNH, as this is where UNH leverages all the data that they bring in from all the different sources that they have. This data has helped provide a competitive advantage for UNH. And basically, what Optum Insight does is that they sell software and risk analytics to their customers. They help with claims, they help with they have administrative software, clinical software. So as we can imagine, this type of business is really complementary to the rest of UnitedHealth's business lines. Okay, now let's jump back to the main revenue breakdown. Now we're going to look at the United Healthcare platform, which accounts for about 64% of revenue. And this is a segment that you probably think about when you think of United Healthcare. Essentially, this is the health insurance business. So we're going to go through this one a bit faster than we did the other segment because essentially every component of this segment does the same thing. They just do it targeting different groups. Okay, so once again, we can see that revenue for the entire platform has been growing over the past few years. Looks fairly consistent. Medicare and retirement is the largest group in this segment, accounts for about 41% of revenue in 2018. This segment goes after the 50 and older crowd in the United States. This is where they offer products that are tied to Medicare. Then the employer and individual segment accounts for about 30% of the platform's revenue. Here's where people get access to health insurance through their work. And then UNH also offers individuals healthcare products away from work. Then we have the community and state segment, and that goes after basically community and state programs designed to provide access to health insurance. Okay, simple enough. Then the global segment, well, this goes after a bit over 6 million customers, mostly in South America, some in Portugal, and then they're scattered throughout the rest of the world. This segment owns and operates about 300 hospitals, clinics, and specialty centers. Okay, now let's try to come up with a fair value for UNH's stock. So let's recap what we know. Each of UNH's segments are doing well. We saw that in almost every revenue chart where we saw. Each of them are consistently growing. Now, the business is mostly in the United States, so that's probably a good thing for UNH's stock. Now, as a consumer located in the United States, I think it's crazy the way that the healthcare system works and how expensive everything is here. But when we're doing an analysis of UNH's stock, well, I'm fairly confident that it's unlikely that the healthcare system in the United States is going to start changing or start lowering their prices anytime soon, as much as I'd love for them to. That being said, I think it's likely that revenue will continue to grow the way it has been. What about margins? Well, this is gross profit margins, and it looks like it's down a bit recently. The green bars are estimates, and it looks like analysts are expecting that things will remain about the same for the next few years. Then, when we switch to net income margins, we can see that net income margins have been getting better recently after declining for a few years. Now, I was curious why these charts look so different from each other. That means that somewhere between gross profit and net profit, expenses must have increased, specifically in the 2015 area. So I saw that debt jumped from about $14 billion in 2013 to about $25 billion in 2015. This means that interest expense would have gone up, which would hurt net income margins. When I dug a bit deeper, it turns out that UNH had issued that debt to fund their acquisition of Catamaran, which is now part of the Optum platform. Okay, so that makes sense. Now, there was also some increases in general operating expenses, but it seems that they've gotten that somewhat under control now that we see net income margins starting to climb again. So, what valuation method should we use? Well, a simple price to earnings multiple seems to be what most analysts are using for UNH's stock. So I looked at a handful of analyst reports and I saw that they were using PE multiples on 2020 expected earnings per share ranging from about 17x to about 19x. And this would be slightly above UNH's 5-year average. And I suppose that makes sense because we saw that net income margins are rising. So improved margins would in theory call for a higher multiple. So we have a few choices. Take the middle, we'll call it 18x, multiply that by the earnings per share estimates for 2020 of about $16.70. And we end up with a fair value of about $300. Now, do we want to be a bit more conservative? Perhaps we want to go with the low end of the range and use 17x. If so, then our fair value falls all the way to $284. Okay, not bad. That's not bad at all, given that the current stock price is about $250 per share. Then our last choice is, do we want to be a bit more aggressive and use the high end of the range of about 19x? If so, our fair value jumps all the way to about $317 per share. So what do you think? Which multiple would you use? For me, I'm more of a conservative guy by nature, so I'd probably lean towards the 17x side. But given a price target of $284, well, that's about 14% higher than the current price. So for me, the question is, what portfolios does UNH's stock belong in? Well, I think that the growth portfolio is a layup because it looks like UNH will continue to grow, and I expect that their outlook will continue to remain fairly stable. I can make a case for the value portfolio, especially since even using conservative numbers, that's still more than 10% higher than the current price. The dividend yield isn't that great, it's about 1.5%, but it's stable as can be, and they've consistently grown that dividend for a long time. So, what do you think? Does UNH's stock belong in any of our portfolios? Let me know what you think in the comments below. Thank you for sticking with me all the way to the end of the video. If you haven't done so already, hit the subscribe button, hit the thumbs up, and I'll see you in the next video. Thanks.